Hi guys, this is Lee with the Market Sense for the week of July 16th, 2019. The charts in this presentation are provided to us by Gettess, and they come from that Trade Navigator software. And in looking at a weekly bond market chart here, we've got some interesting activity to talk about. After making new highs, and yeah, I don't want to say sideways, but they sort of hit new highs and then ground to try to go a little higher. Then they had a little breakdown last week, took out the lows of the last 4 or 5 weeks here. But this is what I like to call an exhaustion bar, or it is to me anyway. It's a little bit bigger than most of the stuff around it, and it closes kind of like below everything, below all the lines you can see and near the bottom of the bar. What that indicates is usually an exhaustion of sellers, and they should go back up at least a little bit. Now, sometimes they can just reverse right back up. I mean, you can look back down here in the middle of the chart. We had this exhaustion week here, and they just reversed right back and started to move up again. But the highest probability in a situation like this is they will at least get back to that lower moving average. Well, you can see they've already done that. So buying is certainly not as great an opportunity as it was if we could have got them earlier. They certainly could have gone down to the 152.08 area here, down here at the projected low. They haven't shown any signs of wanting to go any lower at all. And in fact, I'm not sure. This moving average is about 154. They don't really act like they want to stop there necessarily. So I think, the 155 area is the next obvious target here. And I wouldn't rule out seeing them up here at 156.08 again. We do have a bunch of economic news this week, leading indicators, just all kinds of stuff, but they're all kind of don't matter because the Fed's already telegraphed that they're going to lower rates at their next meeting. And I can't imagine anything from these reports would change that. So, I think we're just kind of going where we go. But we did have the exhaustion bar. They have turned back up, and that's all we could count on, but they kind of look like they might want to go higher. Stocks, well, they just do keep going higher. That's new all-time highs again, and I can't say it enough. You don't want to argue with that. You don't want to sell against that. We're kind of looking for the 30, 33, 34 area up here as a target this week, but it's just a target. I wouldn't call it resistance. Now, support is interesting. If you want to be really aggressive and you really think they're going to continue up strong, and to be honest, this isn't all that strong at this point, but if they're going to continue up strong, they should probably hold the 29.95 area here. That's that upper moving average. I don't know if they will or not. It's not a really strong setup to do that. Probably a better support area is around 29.75 here, where you have both the middle moving average and the projected low. Don't know if they'll get there though. We're in the summer doldrums. You can just see the size of the weekly bars here compared to what we were getting before. Volume just dries up a little bit in the summer. People go on summer vacation, what have you, and we just don't get the activity that we get at other times of year. Now, that keeps it quiet, but it also means that it won't take much to get some sort of fast, explosive move out of this. And, I don't know what could cause that. Middle of the night tweet, maybe? We never get those, do we? Yeah. So anyway, I'm looking for them to move higher still, even though they've started off at the high and turned back down. But real curious to see if they hold this 29.95 area as support. That's actually a very good sign for continuing higher prices. So I'm not aggressively looking to buy there, but I am interested in seeing how they behave. So that's what we've got for you today. I hope you can find something profitable